Good afternoon. How are you? How is everything? I believe you're all doing great. All right. Welcome to the Global Trader channel. And today we'll be talking about types of orders. In case you've not been following and you know you're a newbie in this industry or in this space, kindly go back and check the previous videos so I can follow and learn very well. This channel is just to teach you how to trade forex and also teach you how to trade and also make you to avoid some certain mistakes that a lot of newbies make at the beginning of their training in forex. And sometimes we give you signal, but disclaimer is applied to anything we say here. We are not asking you for money in any way, neither are we forcing you to take any of this financial advice, any of this training. So please note that my name is Olusegun Opale, and today we'll be talking about types of order. In our last lessons, we talked about lot sizes and leverages. So today we'll look at types of orders. Now, somebody say, what is order? What does order means in forex trading? Now, simple. If you go to the market, you place an order. If you want to purchase something, that's an order. Just in a layman terms, you want to buy something, you place an order. You want to sell something, also you are selling something out, it's still also an order. The person you are selling to has placed an order, so you are selling it out. So in forex market we have about 5 different kind of orders, the 5 different types of orders. Please listen attentively. We have the market execution, which is also known as the instant execution. You are buying or selling at the current market price. So what this means is, let's assume you go to the market. What you're doing, a transaction you are having with whosoever you're having it with in the market, is instant, because you are paying the money and you are collecting your goods instantly. That's what we call by market execution. So you are placing your order at the current market price. Either you are buying or you are selling at the current market price. That is instant execution or market execution. Then we also have what we call the buy limit. The buy limit, I'm sure from the word pending, we all know what pending means. So pending, something is waiting, is awaiting, it has not yet executed, awaiting, pending order. So for example, for those that used to shop online, you place an order online, so it is pending until it arrives your domain. When it arrives your destination, that is when you make your payment. So you have already placed an order. So you placed an order at that price, at a particular price, depending on when the market will the what you've purchased will come to your destination. The same way here, buy limit means you place a buy order below the current market price. If price, that is, for example, if price is at 1.14086, a buy limit will be any price below the current price, either at 1.140000 or 1.4. Anything below the current price is buy limit. When your buy limit is always below the current price, just have that at the back of your mind. So for you to place a pending order at buy limit, that means the current price will be lower than any price below it. The price will be below the current price, so you are placing your order below the current price. Then buy stop, you place a pending order above the current price. If price is at 1.14086, a buy stop will be any price above the current price, 1.414200. So buy stop is usually above the current price, while buy limit is always below the current price. Let me also use another for better understanding. Buy limit means, for example, the market is going against, is reversing, is going backwards. So you have a target, a point whereby you know that the moment the market gets to a particular price below the current price, you know it will trigger and begins to go back. So you place your your pending order there, that when this market reverses to this particular point, trigger a market here, execute a market and begin to buy. Also, buy stop means, okay, you believe that from your analysis, you believe that the market will keep buying when it gets to a particular price above the price that it is now. Maybe you are not too sure of this particular price that it is now, the current price, you're not too sure, but you believe that the moment it passes the current price and goes above a particular price, you believe it will continue to buy. That is when you place, that is buy stop. Also the same way, sell limit, you place a buy pending order above the current market price. So the thing is just like inverse. It's like the opposite of the ones, the buy limit and the buy stop. So sell limit, now you place a pending order above the current market price. If price is at 1.14086, a sell limit will be any price above the current market price. So, in the case of buy limit, is always below the current market price, but sell limit now is above the current market price. That means it is behind. When we start doing practicals, you see it is behind, below, above the current market price. While sell stop, you place a pending order below the current market price. That is, if price is at 1.14086, a sell order will be any price below the current market price. You can see this sell limit and sell stop is just like the opposite of buy limit and sell stop. So all these things, you're going to see it by the time we start the practicals very well. So to expatiate on what we just said, now you can see from here, buy stop, order placed above the price, and price keeps going up. You can see this blue line, is it blue or green? Okay, whatever color you try to say, to choose to call it, where my cursor is, you can see this is the current price. But from your analysis, you believe that the market will keep going up and it will break through this particular horizontal line. So you place your buy stop here, meaning once the market gets to this point, to this particular line, it should trigger and it continue to buy. Meanwhile, for buy limit, you can see this dot or a circle. That is it blue? Okay, blue. Yeah, you can see a buy limit is below, when the price gets below the current price. Now this circle is the current price, this where my cursor is the current price. The moment the market reverses and gets to this blue line, to this green line, let it trigger and reverse. So your analysis tells you that once the market gets below the current price and gets to this particular price that you have anticipated, it will reverse and continue to buy. Also, sell stop means you have your current price, that's this blue circle, you have your current price, that's sell stop. Now you have your current price here, so you believe that by the time the market keeps selling and it gets to this particular red line, this horizontal line here, which is your price, so the price, when the price is below the current price, it continues to sell. That means you place your pending order at this particular point, order placed below price, and price keeps going down. So from your analysis, you believe that the price will keep going down, so it will trigger and continue to go down. While sell limit means you have the current price here in this blue circle here, so you believe that by the time order placed above price and price then goes down, once the price goes above it, it will get to the red line, and it gets to this red line, it reverses and begin to sell. So that is sell stop and buy stop. That's the pending, all the pending orders, the kind types of orders that we have. So we have it here again to elaborate better. Buy stop enters ahead of time to enter long if breakout occurs. So all these things happens when there's a breakout. You can see here, you can see this long blue line. There was this what we call a breakout. The candles, the market came up and broke out above the all the previous higher highs. It broke it. You understand those language later, those terms later. So it breaks it, and we have this blue line, buy stop. It go and trigger your pending order here. This blue line, it's your pending order. It continues to buy. That's buy stop. Expected move higher, because you expected it, you anticipate that it's going to move higher than the previous. So we have them here. We have buy limit here. Buy limit, you can see from this arrow, it came here. From your analysis, you believe that it's going to get to these dotted and dash lines, red lines, at 1.4143.904, and you believe that by the time it gets to this point, it will reverse and start going up. So that means the price below the current price, this is the current price, and below it, this is it, it will trigger. That's your buy limit. It will reverse to go up. Also, sell stop. Sell stop, you can see from this red line here, that is our, this is our current price here. We have our current price here. So the moment you have a price below your entry point, your current price, and it triggers that begin to go down, expected move lower, and it moves lower, that is, you can see this red line here, this arrow here is our sell stop. You placed an order there, that the moment this market gets to this point, continue to sell. Why? Because from your analysis, you believe that the market will be keep selling. Sell stop enters ahead of time to enter short if breakout occurs. So when you hear short, you still sell. When you hear bearish, you still a sell. So we have sell limit now. We have sell limit. You can see we have the sell entry here. We have the limit here. We have the stop here. So sell entry, let's assume this is the entry point. So sell limit is the market is going up, but from it's going up from your analysis, but when it gets to this particular place, there's a limit there, so it will come here and stop and reverse. That is your sell limit. So this is the limit at which you feel the reversal can occur. When it gets to this point, it triggers here and begin to go down. That's sell limit. So sell limit is being placed above the entry point. Sell limit is placed above the entry point, while sell stop is placed below the entry point. So for today, thank you very much. Thank you very much. If you have not subscribed to this channel, please ensure you subscribe, and please ask questions. You can send us mail you can send us mail at globaltradershfx@gmail.com. You can comment, you can share, you can like, you can tell us whatever you want to tell us, and very soon expect us to start some live trading with you. You can invite your friends to this channel, and thank you. Click the notification button, and remember, God loves you and God bless you.